Where are mortgage rates going to go in 2024? What's going on, friends? Clients, Jeremy Larkin here with the Larkin Group home selling team in Southern Utah, beautiful Southern Utah, St. George, Cedar City. It's been raining the last couple of days. It's the week of January 21st, 2024. And I think a lot of people want to know, where are rates going? Where are mortgage rates going this year? This is our weekly deep dive. I think you're going to love what we're going to share in about 10 minutes today. It's a lot of content. It's going to help you make really good buying and selling and investing decisions. It's an election year. Who knows what's going to happen? So guys, let me go ahead and share my screen. And should we get right after it? Let's get right after it, guys. So, all right, here we go. It's the deep dive. Are mortgage rates going up or down? Well, gosh, great question. And we're going to talk about this. As always, every week, we remind you, most agents know what's happening. Good agents understand what's happening. Great agents can explain what's happening. One of the challenges with our business is that we all have the same title in real estate. So because we have the same title, it's just like, hey, every realtor is the same. You know, a brand new agent on my street that just picked up their license, but they have a full-time job at Home Depot. They're just the same as you, Jeremy, with, 2,000 transactions under your belt, right? Because we have the same title, realtor, but they're not all the same, right? And what we want to do is help you make great buying and selling decisions. So hopefully we can explain what's happening. Mortgage rates, probably the single largest determinant of home affordability in North America, right? And in the world. Anonymous quote, don't ever try and forecast interest rates, or more specifically, mortgage rates, because you will always invariably be wrong. Well, hopefully we can be close to right here in 2024. This slide is so weird. I don't know what happened when we converted it, but the numbers turned out funny. So mortgage rates just hit the lowest level they've been at, friends, since May of 2023. And we went all the way up to, this is 7.79. Honestly, they hit 8%. And we're hovering around 6.5, 6.6% today. I want to talk about what that really means. That means over the last several months that homes have become about 15% more affordable. That is if you're getting a mortgage. And the reason for that is there's a real simple equation. A 1% decrease or increase in mortgage rates equals a 10% increase or decrease in your buying power, okay? So since they're down about 1.5 points, it's a 15% increase in buying power. So we talked about Cedar City versus St. George on our radio show today. If you're trying to purchase a $400,000 home in Cedar City, you could now spend $460, $450, $460, or you could stay at $400 and it would feel like $340. In St. George, if you were looking at the $550,000 home, $500, now you can spend like $570, or you could stay at $500 and it feels like $430. Okay, so rates cause a massive impact in home price affordability, right? Well, one of the things that's happened is 78.7% of all mortgage rates in the United States are at less than 5%. I have one of those, and I have a couple that are above that on my investment properties, and I don't like it, okay? So if we look at this slide, let me take this into a little cleaner. I have a cleaner slide here. This is better, okay? So 37% of all mortgages are in that 3 to 4% rate. Fewer guys, well, 22.6% of mortgages are sitting under 3%. I actually have one at 2.85%, and some of you may have that. 20% of mortgages are at 4 to 5, 10% of mortgages are at 5 to 6, and 11.5 are above 6. Well, what does this mean, right? So what this means is, let me read a quote here. This is from a gal that works with Bright MLS. Homeowners who are selling aren't influenced by rates, with 90.5% of successful November sellers stating they were going to sell regardless of what rates were. Maybe. That's those that sold, right? I actually don't agree with this, and that's why I wanted to bring it up. What I feel like is that a lot of sellers are not putting their home on the market because they don't want to give up their low rate. And so unless they're purchasing an investment property, or unless they can keep their home, put a tenant in it, which is what I did in downtown St. George, and then buy the new one so they can keep the old rate, a lot of people sat on the fence, okay? So I disagree with this, Erica, and I think that a lot of sellers have been sitting on the sidelines. We're going to talk about why that's keeping prices high and where prices are going to go this year. Top 3 reasons buyers paused their buying decision. Those who were thinking about buying and then didn't buy. Well, 72%. And by the way, they could give multiple answers. This is not total 100. 72% said mortgage rates are too high. 35% said inventory, like I want more options because inventory is relatively low. And 17.5%, this is kind of like rates, but they just said, look, affordability is the problem. So we don't know how much overlap there was between that answer and mortgage rates, right? Here's the deal with real estate. It is a great bet. If you had purchased a home in 1991, I was 16 years old. And, we always say if you had purchased a home and kept it. Well, what about if you just purchased a home and then later sold it and bought another, sold it and bought another, sold it and bought another? Same difference. You would have seen a 580.4% increase in your home's value, in the asset, right? And since 1991, hopefully with all the equity, you either have a small mortgage or you pay the mortgage off, right? That is an insane investment. And here's the cool part. You probably weren't even thinking about it as an investment. You were just thinking, I need a place to live, correct? So as we think about what buyers paused, I think there are going to be a lot of buyers in 2024 and from 2023 that say this year, crap, why didn't I buy a home? I thought they were too expensive. I thought rates were too high. I should have. And I want to show you why. Okay. Why are rates so high? Well, we could get into a lot of semantics, right? And this is about something called a 10-year treasury yield. For the purposes of our conversation today, we can't get into this explanation. We only have about 10 minutes, okay, total. I don't want this to be much longer, okay? So right now there's a large increase in the spread above what's called the 10-year yield, okay? That's a whole separate conversation. Well, what happens now? Well, a lot of people are like, I'm going to wait on the sidelines because I think prices are going to fall. And I think rates, and then I want to get a better rate. What would it change your attitude if you're on the sidelines, if you thought home prices were not going to fall and they were actually going to go up? Look at this. Former projections by Fannie Mae, governmental sponsored entity, were that we'd be at 7% today. We're at 6.4. They said that we'd be at 6.5% by the end of 2024. And now they're saying, shoot, I think we'll be at 5.8. What happens as rate falls? Do more buyers get in the game or do more buyers pull out? Correct. More buyers get in the game, which means competition increases. Okay. Let me read this from Dean Baker, a senior economist for Center for Economic Research. He says, it also appears that mortgage rates are now falling again. It appears, Dean, they are. They will almost certainly not fall to pandemic lows. Guys will never see those rates again. The government learned their lesson. Although we may soon see rates under 6%, which would be low by pre-Great Recession standards. We forgot that below 6% is a low rate in the history of rates. The historical average of interest rates is like 7.5% since they tracked it. So we got spoiled during the pandemic that rates were always going to be 3%. They were never 3%, and they'll never again be 3% from my estimation, okay? The housing market, like so many other markets, is almost impossible to time. The best time for prospective buyers is when they find a home they like that meets their family's current and foreseeable needs and that they can afford. Nailed it. That is just clean wisdom, okay? Here's the deal, guys. Rates are falling. And oddly, Realtor.com, the website tied to the National Association of Realtors, that's so odd to me. They're the only one of the key 8 forecasting bodies, economic bodies in the country, that think home prices will fall in 2024. As a matter of fact, 7 said they will go up. 3 of them said they thought they'd go up by more than 3%, including Zillow. This MBA is the Mortgage Bankers Association, and the average of all 8 was that home prices would go up by 2.1%. So prices are forecast to go up. Why? Because inventory is low. Rates are falling. So if you're sitting on the sideline, I'm not saying you should buy a home. I'm saying that you should really consider whether it would make sense, go back to this quote, if you could find a home that fits your needs, right? Current and foreseeable, that you can afford, right? Could you purchase it and then refinance it later, right? But I think there will be some regret after 2024. I do. The government is most certainly going to lower rates. If nothing politically, they're going to do so, guys. So next week, all right. So before we move on, if you have questions about buying, selling, investing, and you want to, like, we can, and maybe you want us to just give you like a home equity report. We're assembling some of those this week, where we just give you a quick home equity update or checkup, and we can tell you exactly how much equity you're sitting on, help you make some decisions about whether you want to sell, right? Because most people sell because they just want to, right? Or they need to, but most just want to, right? You're sitting on the sidelines. Let us assemble a home equity report for you if you own a home. If you're sitting on the sidelines and you don't own a home, I would tell you I'd be considering it. And I'd be considering it based on the slide I showed you with what home prices have done since 1991, right? Next week, we're going to talk about the boomers. Are the boomers going to move? So many millions of baby boomers in North America and the United States. Are they going to move? And if so, when? And that will affect home prices. That will affect the market. Again, guys, reach out to us at gostgeorge.com. You can scan that with your phone if you're watching on a computer, or just head on over to gostgeorge.com and say, hey, I want to chat. I've got some real estate questions. I don't want to be sold. Yeah, we don't want you to be sold. We want to help you make a good decision. Jeremy Larkin with the Larkin Group home selling team, guys. Wishing you the best. Thanking you for tuning in. Subscribe to our YouTube channel. We're going to be doing this hopefully about every week. Over and out.